Good morning and welcome to Market Day Report. I'm Chris Swift. We have seen the markets a little bit higher overnight trade. We got some CPI data this morning. We got retail sales data this morning, and they have really started to move the markets quite a bit. So let's see where we're going to start out this morning in the corn board. And it is currently a little bit firmer with the July contract up 4 1/4 at 471 3/4. That September corn is up 4 1/2 at 482 1/2. And note December corn 495 1/2 up 4 1/2. We keep trying our best to get to that $5 handle. See what soybeans are doing. They're a little bit firmer with the July up 10 1/2 at 12.25 even. The September contract up 9 at 12.14 1/2. And that new crop Novi 12.13 1/2 up 8 1/2. And we'll take over to Chicago wheat. Chicago wheat is firmer, up 15 1/4 on the July contract at 687 3/4. The December at 731, up 13 3/4, and that's a pretty good carry that we've got all the way through the Chicago wheat. Let's see what Kansas City's doing. It's not going to be left behind, up 13 1/2 on the July at 696 3/4. Moving in on that 7 handle. September and out, all are above $7. With SEP at 710 1/4, up 13 1/4, and Deese at 730 3/4. Up 13. We'll wrap it up with Minneapolis spring wheat this morning, up 11 3/4 on the July at 745 even. The December contract up 11 1/4 at 766 3/4. I want to invite my guest in. It is going to be Brian Hoops. He is with Midwest Market Solutions. And Brian, good morning to you. Hope everything's great, and I hope you're dry this morning.
Good morning, Chris. Yeah, sun's shining, and so far we're dry. We won't say what will happen in an hour from now because we'll probably get some rain, but so far so good. Beautiful morning.
Good deal. Anything from the CPI report that kind of made you think, well, I really want to be doing this or I really want to be doing that when everything gets opened up at 8:30 this morning?
Yeah, I'm glad you asked about that. So CPI numbers came in at 3.4%. It's down just a little bit, but right near expectations. But the big, I think, news is this is a 37th consecutive month we've had inflationary numbers above 3%. So it tells us the Fed really cannot lower interest rates. Inflation would move even higher. They're kind of caught in the middle here. They don't want to raise rates. They don't want to lower rates. They really can't. So it tells us inflation's here, probably going to stay for a while. And you see big moves in the U.S. dollar index down this morning. The gold and silver markets, inflationary indicators, kind of that safe haven, up sharply today, and we may start to see some more of that inflationary buying in some commodities that the funds consider cheap. Now, we're higher overnight in the wheat, and that's probably primarily due to what's going on in Russia as far as crop deterioration and crop losses. But the quality tour that's going on this morning tells us the first day of the tour anyway, we're seeing the third highest in the last 24 years as far as yield potential for that wheat crop. And with the rains that are forecast, I don't think that yield potential is going away anytime soon. So we're trying to anticipate we're going to see better export business because of what crop losses are occurring in Russia. But I think that's, that's a pretty wild bet to be making if you're a producer. I think you have to be looking at hedging opportunities and marketing this crop because you're going to be left with a crop that's large in size and not much export potential.
So all we've been talking about the last 2 weeks is rain. We can't get the crop in. It's going to be delayed. We've had some have to have a replant where we got the bottom end of it. But yet, when we look towards rain, we always think, well, rain makes grain. So are we just kind of at a teetering point right here where once we get the crop in, it could really dramatically drop because we do have great subsoil moisture?
Yeah, that's kind of the thing is, you have a little bit of a window here this week for most of the Midwest where we're going to see some days of rain, some days or light chances of rain, and some days of sunshine. So there's kind of that window up until about next Tuesday when a huge system is expected to come through the Midwest, and that could drop 2 to 6 inches or more across Iowa and Nebraska into Illinois, Missouri. All these areas are going to just get pounded with rain. So if you have a chance to get the crop in the ground this up until that time frame, great. If you don't, we're talking, May 21, 22 by next week with heavy rains, soils getting saturated again. Then you start talking about prevent plant. That could be very friendly for the corn market. It just probably going to mean that we won't plant anything in some of those acres. And that would be, as I said, friendly for the corn market. But there's a lot of soil moisture. It's going to take away, in a lot of these areas, it's going to take away the threat of that hot, dry summer, at least through the month of June. So it kind of depends, it does every year. It gets down to weather and your location, how much rain you're going to receive or not receive. But yeah, we're kind of set up here where we could see a downturn by harvest in this corn belt, because if we produce this big, massive crop the USDA is expecting.
Well, we got a lot of questions in front of us. Stick around. We're going to take a real quick commercial break and come back and talk with Brian Hoops. We'll try to figure out what the livestock market's going to do. Risk is inherent in commodity production. It can't be eliminated, but can be managed. With over 30 years of experience, Swift Trading Company has the knowledge and provides the service to meet producers' needs. For more information, visit swifttradingco.com. All right, welcome back. Let's take a look and see what we traded the livestock market at yesterday. Get a good guess of what we're going to start at today. We were higher across the board in most every contract month. The June up 260 at 178.17, trying to narrow a positive basis right now. The August contract up 272 at 176.12, and October up 252 at 179.35. In the feeder cattle market, it is just the opposite. We are diverging basis on it. Both of those are seemingly egregious to the cattle feeders, so we'll see how all this really works out. The May contract closed up 390 at 243.27. Yesterday's feeder cattle index was at 241.75. August was up 432 at 255.67. October up 432 at 257.25, the highest contract month for the rest of this year. The hog market, it was up a little bit as well. June up 85 cents at 98.35. Yesterday's lean hog index was at 91.22. July up 87 at par 92, and August up 62 at 99.90. I want to invite Brian Hoops again back in this morning. And Brian, what I'm seeing is that a complete opposite spread in basis between fats and feeders. What's going on here?
Yeah, it looks like the Packers are cutting their kills this week, and they're planning to next week as well. Our slaughter's down about 13,000 head just through 2 kill days of this week compared to a year ago, and that's really propping up the box beef. You saw big gains yesterday. I think we closed like $5.44 higher in the choice and over $6.60 higher in the select. So some big jumps there, and it really prompted the cattle futures to, I think, move higher. Of course, we had corn lower, and that helped the feeder cattle market to rally yesterday. Today may be kind of a different story. You know, everybody's getting kind of friendly to this cattle market now. All of a sudden that it rallied sharply. It's been very volatile, but a very choppy type trade. I'm concerned that maybe we overdid it yesterday. We're going to pull back just a little bit until we get that cash trade. So we're still waiting on the Packers. They're looking like they're in no hurry, similar to what we saw last week, that they are content to wait it out and cut their kill speeds to try and prop up their margins. At Monday, I think they were negative $112 a head, and it's improved to about negative $40 a head right now, just because those box beef have moved higher in 2 days. We may see another day of that if they keep that production numbers down.
And if they do have to pay higher cash, though, that begins to negate that margin that is opening up with the higher box beef prices there. Is most of this what you see right now, maybe pre-buying for the holiday, for Memorial Day? You know, it takes about 2 weeks to get everything kind of from the slaughter plant all the way into the grocery store shelf.
Yeah, exactly. I think that's exactly what's happening. Is they're trying to get, you know, some of this inventory around them to get the kills met and get the box beef demand, which is usually very high Memorial Day. You got to get those coolers full and grocery shelves stocked. After that, we could see that slow down in demand. So, you know, if we can move higher here in the futures because of a higher box beef and maybe a cash trade coming in steady, you got to look at the rallies here and just be defensive, I think, into the summer months, especially in the live cattle.
And anything just right offhand on the hog market?
You know, that's a market that's trying to find some support. We saw weights out this morning. They're actually down just a little bit from last week, but still almost 3 pounds heavier than a year ago. Again, for just similar to the cattle market, you have too much supply coming at this market. You're really dependent upon export business, and that has slowed down recently in the hog market as well as the cattle. So that market struggled. Rally's probably going to be sold in this hog market as we're, you know, in a downtrending technical futures market.
Well, and I was reading some information yesterday. It looks like Europe is fixing to expand just a little bit on their hog production, too. So it'll be something to watch out for. Brian, really do appreciate you taking the time to be with us this morning. It is Brian Hoops. He is with Midwest Market Solutions. And Christina, good morning to you.
Good morning. You know, I was interested in that gold chart that you pulled up. Always a good hedge against inflation. Gold has proven, to be sturdy over time. But we'll see. Anything can happen in this economy, my friend. Thank you. We appreciate you to guide us through.